Alright, hello everybody, welcome to a new video. This video is ended up being about Zillow for kind of the most accurate data. There was Rent Cafe and a couple other places I was using, Hotpads and a couple places for data I couldn't find on Zillow. But Zillow seems to be the most accurate throughout the market, and I found out they actually have a market temperature for the median home value, how it's going up over time, the forecast and everything. They do a pretty good job as far as generally speaking. So that's what we're looking for is generally speaking market data. Now this market data, of course, when accumulated over time with all of these, you start to see huge trends. So what this spreadsheet is it's basically what state are we looking at? What major city in that state? What county? So if we look up probate records to start wholesaling in that area, we know the county. What's the average home value? And this is based on 1,500 square foot. So it's basically 1,500 square foot times the cost per square foot as seen on Zillow. I know Zillow goes through MLS records, so Zillow does actually have records of homes that were actually sold. So this should be a relatively accurate example here. Now, I don't know if it's homes that are currently listed at that price, sold or not sold. Or I don't know if it is only homes that were actually sold at that price. I think it's the latter. I think it's or the one before. I think it's the one where it's 626 square foot of all the homes ever listed or seen listed through Zillow or closed. So it's both. And I don't think that's the most accurate, but take way more time to accumulate only sold listings. So keep that in mind. Now, how much does it cost if you were to rent it out per square foot? It'd be $2.38. Well, if that square footage was 1,500 square foot on the national average, how much would that be in monthly rent? Well, if it's $2.38, it would be $1,500 times 238, be about $3,500 to rent out just a regular single-family home, 1,500 square foot. Now, what would the monthly mortgage cost? Well, the monthly mortgage cost is a pretty simple mathematical equation. It would be the actual home value price, which is the square footage times 1,500. So it'd be the home value price, and then that would be times 1.75. Because when you consider the amortization schedule of a mortgage, you're actually paying 75% of the home value tends to be the mortgage, and that's based on like 4.2, 4.5%. So if you don't have a really good credit score and your percentage point of interest is over 5%, over 6%, this number gets dramatically higher. But generally speaking, with good credit, you should be paying about 75% of the home value on top of the home value, just based on interest. So it would be that mathematical formula, 1.75. Then you're going to divide that by 30 years and divide it by 12 months. And this should, generally speaking, be your mortgage payment. So if your mortgage payment is this, and your monthly rent payment from the actual going rate in your area for rent, um, are you going to make money? So that's what we're going to actually ask right here. So this is the cost over ownership. This is the real thing that we're looking for, the holy grail right here. This is the only thing that really matters is the cost over ownership for rentals. So in San Jose, you see that that's on the bottom dollar. So the monthly mortgage is 4,500. The monthly rent is 3,500. So if you did not buy your house before this gigantic boom in house sales, where supply over meets the demand or demand over meets supply, and housing prices are just gargantuan, insane, over $500,000. Well, you're going to actually be losing money if you buy a house right now. You'll be losing money on rent. So that's what this spreadsheet's about. Where can I buy a house right now, in theory, and make the most amount of money? So go ahead and write down in the comments down below, where do you think is the most asset valued city in the United States? Which means the mortgage is like really cheap, but the rent is double, triple, quadruple the mortgage cost. Where do you think that is? Comment down below. All right, let's actually look and see. And that is, drum roll, New Jersey costs about $941. And it's Newark, New Jersey, by the way. $941 should be your mortgage. But you can rent it out for $2,500. Hell yeah. Sounds like $1,000 in profit minimum in Newark, New Jersey. So maybe you should move to Newark, New Jersey, you know? So what about the most popular state out of these most profitable rental units? Well, the highest potential for each state, if you go, drum roll please, in the top 10 will be right here. And you have 1, 2, 3, 4, 5 instances of Ohio. Wow, that's pretty incredible. Over 200%, almost over 200%. Ohio is almost over 200% here on average. We have 222% average return on your investment in Ohio. So where should you buy houses right now, right this second? Well, I think you should probably just move to Ohio, invest in Ohio heavily, because right now you could get a mortgage on a property for 400 to maybe max Cincinnati, the biggest area, 900. But you're going to charge double for rent. So that's pretty incredible right there. So obviously all of these are highlighted in green because I also have another cool little analytic tool. It's going to be the payoff mortgage rate and the version of years. So, this basic calculation over here is based on 30-year mortgage, every 12 months, how much is that mortgage going to be? Well, if you, in theory, put all of the rent, 100% of the rent, towards the payoff of the mortgage, in theory, how long would it take you to pay off that mortgage just using the renters? Well, anything under 10 years payoff, which means you're going to pay off your mortgage 3 times faster. And that also means you're going to pay way less interest, by the way. So you're actually saving way more than this spreadsheet actually hints at because you're going to be paying less interest. So you're basically going to pay it in 10 years or less. Uh, New Jersey, you're going to have the tenant, the renter, pay off your property in 6.3 years. Dayton, Ohio, if you go buy a house in Dayton, Ohio, 6.7 years, your property will be paid off. How incredible is that? Out of a 30-year loan, 23 years will be pure profit of $1,000 or more. So 23 years times $1,065 a month times 12 months in a year, of course. So that's $300,000 of pure profit this one house will make you over the course of the next 30 years. Now let's look at California, the opposite side of this spectrum. So California, San Jose, if you were to buy a house right now, it'd be $4,500. Monthly rent, you could probably get $3,500 per square foot on a per square foot basis. So how many years would it take for your tenants to pay off your mortgage? Well, this number starts to get a little bit skewed around here, but it's basically 21 years. Let me actually redo this monthly mortgage payoff based on these numbers, because I feel like these numbers will be a little bit more accurate, so just one sec. Okay, there we go. This is a highly accurate mortgage payoff, not necessarily based loosely on square footage ownership rental, but the actual monthly mortgage and the actual monthly rent. And this is what the number is. So it's basically this times 1.75, and it's divided by the rent times 12 by times 30. And then after that equation is done, you're multiplying by 30. So how many years? So, and this makes sense too when you look at it aesthetically. It makes a lot more sense. So if you're paying $4,500 a month in mortgage, and your renters are giving you $3,500 a month in their monthly rent payment, how long is it going to take you to pay off a 30-year mortgage? Well, in theory, this is going to take you 38 years. You're going to be underwater. You're going to go bankrupt, basically, long story short. So right now, you should not own a home in San Jose and rent it out. That would be retarded unless you got it for way under market value. That is the only way this would make sense. But You can get an under market value home anywhere in the United States. So what really matters in the end? What really matters is how long does it take to actually pay off the loan there. And look, these numbers did change pretty dramatically, but now they're actually accurate. So the actual mortgage payoff will be in 11 years. So you'll pay off your mortgage still about 3 times faster um, by being in New Jersey, Newark, New Jersey. Then we got Dayton, Ohio, Cleveland, Ohio, Akron, Ohio, Toledo, Ohio, Cincinnati, Ohio. Basically, Ohio still, of course, runs the gauntlet with if you reinvested your monthly rent profits into your mortgage, how quickly can you pay off your mortgage? Ohio looks like the clear winner on this generally speaking, um, macro economic level of housing, a much larger level. And again, you once you choose your cities, so I chose my states, the most profitable states, and then I narrowed it down and niched down to the cities. And now that I'm on the city level, I could actually hyper investigate each individual city if I really wanted to. So where would be the best place to actually buy a house, buy a house for cheap, 50 to 70% on the dollar, flip it, make a profit just based on that actual equity homeowner value. And then on top of that, if I bought it low, flipped it, and I still have profit just based on the sale of the home, what if I rented that nicer property out and got top dollar for rent? That's what this situation kind of describes a little bit better. So I hope this kind of brings some closure to, oh, this is where I'm going to have rental income. I currently live in San Diego, California. Let's go and look at where San Diego, California is on the chart. So lowest to highest profitability. So you're going to make a couple $100. You're going to basically be at a 12% profit margin. So you're going to make a couple $100 every month. But you start to actually lose money. Where do you start to actually lose money at? Well, if you go to Pearl City, Hawaii, Cambridge, Massachusetts, look how basically anywhere where the house is over $1 million. See that statistic right there? Any house that is over $1 million, you're basically going to be underwater. So what does that say? If the house is over $1 million, get the fuck out of that area if you're going to try to buy a house. You're retarded. You're literally retarded. So California and San Mateo, you are super retarded. Yeah, San Jose, if you're gonna buy a house to rent it out, oh my goodness, come on, go somewhere else. Basically anywhere that's over $1 million in value. Now, what is this gonna flip the script though if we change the value from the lowest to the highest? Yeah, it does actually. So wherever the cheaper homes are, ironically, is where your biggest profit margin is. Who would have ever thought that? Something really interesting also here is the actual percentage here. So Hawaii, if you were to go down here, Hawaii actually pops up kind of in the middle here. Let's just sort by Z to A and get Hawaii there. All right, so where is the most profitable place to live as far as for rent in Hawaii? You want to live in Wahiawa, Hawaii. You're going to save 10% on your rental cost. A homeowner who buys a home right now, right this second, is going to pay $4,100 a month, and you would pay $3,700 a month. So the people you'd be renting from are people who've owned the home for like 20, 30, 50 years. So they don't care because this price is inflated for them, doesn't matter. So they'd actually be making profit on you. But if you buy the home right now in Hawaii, you'd be losing money. So it'd be a great renter market. So if you go to Hawaii right now, you could rent the crap out of that. But if you were in Honolulu, you'd still save a little bit of money. If you were in Hilo, Hawaii, it would actually cost you a little bit more. Or if you looked at it from home ownership perspective, where's the best place to buy a home on Hawaii and rent it out? It looks like Hilo is actually one of the best places to buy a property and rent it out. There's actually not a lot of properties available, so the supply-demand curve for Hilo is actually pretty high in favor of renting to tenants because there's only a couple places available if you check on on Google and all the sources for finding a rental. So that was pretty interesting to find out that you can actually own a home in Hawaii and profit more than owning a home in San Jose or San Francisco. Look at that. San Francisco, you're losing a couple $100s a month. Why? Because it's over $1 million fucking dollars. That's why. So what trends did I actually notice with this? What makes a great rental city? Well, some basic facts that you could see when you sort by largest to smallest here. What makes a great rental city is having a population under 400,000 people. So here's the population. And let me drag it down and select the most profitable cities. We get about 220,000 on average. The highest population is 384,000, 324,000 in Texas. So basically, you want to be under 400,000 for your city, and that means it's not going to be as competitive. So home ownership is not going to be as competitive. That's what you're really looking for here. You don't want the home ownership market to be too competitive. So you'd want a population under 400,000. This is where the data really starts to make you money. The home cost needs to be under 150,000. Well, why would you say that? Well, let's highlight the most profitable ones. $157,000. On average, out of the top 13, what about the top 5? The top 5 most ridiculously profitable are under $117,000. So what does that mean when you're buying a house? You want to buy the house under $150,000. You want the rental cost to be 3 times the mortgage. That was an original statistic. I would say, I mean, you want to at least have it be 2x the mortgage. And that is totally possible if you flip it. If you buy it low, you flip it, and you put it on the rental market, like in Newark, New Jersey, you could definitely get this. This is an average, but in some cases, like in Ohio, it's actually an upper tier average. Uh, but you could definitely look at that. $941 a month for a mortgage, but $2,500 a month for rent. If you flip that appropriately to have good specs in a good neighborhood, you could easily be making double double your income. So the top 6 there, the top 6 cities, you will double 237% ROI. So that's a 137% ROI, return on your investment. You put down $1,000 on a table every month, and that magically turns into $2,370. And you get to keep $1,370, or you could reinvest that back into the mortgage and pay off the house really, really quickly, because a guarantee over time is home prices will increase. Another guarantee is rental prices will grow over time. These two numbers will grow over time. So what matters the most? Paying off your mortgage as quickly as possible, because you want to have the highest profit margin when these rental prices and mortgage prices go up. You won't even be competing with anybody on the market because your property will be paid off in 12 to 15 years. So you don't have to worry about everybody freaking out about, the San Jose crisis where it's more expensive to buy a home than it is to rent a home. You don't have to worry about that because you'll be paid off in 10 to 15 years when everybody else will have to buy into a new house. So that's what this spreadsheet is about here. And last thing here, house will be paid off in under 15 years, so half the speed. So what makes a great rental city? To summarize this video up before the 20th minute here, what makes a great rental city? You want a population under 400,000 people. You want a home that costs under 150,000. You want the rental cost to be twice the cost of the mortgage in a perfect world. And the house will be paid off in under 15 years because you'll reinvest that into the mortgage. Now, in theory, you could think of this 2 ways. You could pay off the mortgage twice as fast, or technically, this is only $1,000 a month. This is $2,500 per month. So technically, this tenant can pay for another mortgage, and you could have 2 houses open at the same time. So you can grow your house collection twice as fast, or you can pay off the mortgages twice as fast. But then it gets a little bit more complicated where you can go in and refinance. So let's say you buy this $190,000 house and you buy it at let's say $120,000. You put $30,000 in repairs, it's $150,000. Now, Now you bought it at 120,000. So if you go to refinance it, get another mortgage out on it, like 6 months, 12 months later, you could actually get the assessment to be anywhere from 190 to 250, $1,000, and whatever extra equity that you just built in by flipping it and repairing it, you can actually upon asking for that new mortgage, you'll pay off your old mortgage, which was, cost plus repairs around 150,000. If it's worth 200 or 250, now you get a pocket an extra 50,000 or 250,000, and you could reinvest that into a new property, and this person could help pay the mortgage on that new property. And then once you actually rented it out, these renters will of course pay for the property. But where can you compound interest grow the quickest? Newark, New Jersey, Dayton, Ohio, Rockford, Illinois, Cleveland, Ohio, Akron, Ohio, Toledo, Ohio, Elizabeth, New Jersey, Cincinnati, Ohio, Pennsylvania, Allentown, Illinois, Aurora, Illinois, Lubbock, Texas, Lafayette, Louisiana, Corpus Christi, Texas. Where's the least competition? Clearly in Ohio, and a couple cities in New Jersey. Ohio and New Jersey, that's what really should be focusing on to grow as quickly as possible in the real estate game. All right, so I hope this video you found helpful. I'm going to go ahead and save this spreadsheet and upload it so you can kind of do your own cross-match analysis if you'd like to. These are the home value comparison charts over here that I used. I used Rent Cafe. I actually ended up kind of killing Rent Cafe. I wasn't too happy with that. But I'm doing another spreadsheet, most likely based on the rent jungle here, the month-over-month growth in certain rental markets. So which markets are actually growing. So before you would actually dedicate and lock down money in, the most profitable ones here, you would actually want to make sure that month over month that it's growing in these areas. If it's shrinking, that's a bad sign. That means your rent is going to go down if there's less demand for that rent. So thanks for watching the video. If you have any questions, feel free to drop a comment down below. If you found anything really interesting that you had no idea of, feel free to let me know what that was down below. But thanks for watching. You guys have a fantastic day.